Hello, ladies and gentlemen. Welcome back to another aerial effects video. In this episode, I will be talking about fundamentals or news events, if you will. So, I've been getting a lot of questions lately about fundamentals, whether I trade it, is it a good time to trade, does news even matter, and the different ways in which we can go about trading the market around news. Now, I'm going to answer a lot of these questions. Hopefully, it clears up all the confusion. I'm going to be going over the common mistakes people make when trying to trade news, what news is really used for, and then some examples of how news impacts the market. All right, so first and foremost, let's talk about what is a news event. So, just in broad terms, a news event, as can be found on forexfactory.com. If you just type in Forex Factory, you can see all the news events. And these are the large news events or data that comes out for each country or economy that affects the economy. Hence, the affects a currency, right? So if a news event comes out within the US about a federal funds rate that happened on Wednesday, July 27th at 2 p.m., it will impact the US dollar. So we can see here these red folders, high impacting news events, is what we want to be looking out for. The yellow and the orange don't really matter too much. So we can see the date, we can just scroll through July 28th, the time in which these news events will be released. In this case, this is Eastern time, this is local time for me, the currency pair in which it will be affected, how much of an effect it should have on the market, what the news event is, the actual data, the forecasted data, and the previous data. So this is a very good tool to use when looking at news events across the board so you can prepare your trading accordingly. All right, now let's go back to the charts. And now before I get into some examples, I want to go over what many people believe news actually does. So first and foremost, as you guys know or should know based upon our smart money strategy, you should know that smart money is all about liquidity and volume, how the institutions are constantly mitigating their orders, taking retail trader stop losses, adding their large contracts to the market, filling inefficiency, making the market efficient, and moving price as they wish. As we all know, or you should know, we are not the movers of the market. They are the big banks and institutions. The central banks are what manipulate price and manipulate the movement. So price does not move just to move. It moves very specifically in accordance with what the central banks want to do. All right, so many people will say, oh, I just got stopped out by a few pips and then it went in my correct direction. Well, yeah, it probably did because there was probably a ton of people who had the exact same stop loss as you because you most likely are trading some sort of retail concept. Because when there is a certain amount of volume above or below a certain level, aka your stop losses, those banks are going to manipulate price to go take your orders to not only make money, but to then be able to free up enough liquidity in order to place all of their contracts at that exact price to get a better price to then move the market in the overall direction, right? So maybe you caught the directional bias correct, but you didn't catch the exact precise entry correct. All right. So this ties into news events as well. Many people think news events are just a ton of volatility all at once, and they don't take into consideration the actual purpose of the market moves. So when price, let's just say for instance, we're trending down, a news event comes out right here at this exact time, and then price just all of a sudden goes like that, just goes wild. Many people are like, oh, it's just the news. I got to get out of the market. I got to take profit. I got to take my stop loss away. I don't know where to enter. It's just craziness that's going on. I don't know what's going on. In all reality, what news does is it does four things. It can act as mitigations, meaning when news events come out, it will the banks will have an excuse to push price to mitigate a level, can take liquidity, acting as an excuse to go target a liquidity pool, to fill an imbalance, could act as an excuse to go make the market efficient, or continuation. It will just excuse to inject volatility into the market to continue with the overall direction. So in essence, in layman's terms, news is just an excuse for the big banks to push price in the direction it was already meant to go anyways. Even if the news did not come out, if there was no news, and there was a level here, a valid level that price needed to mitigate from before going short, if there's news, that would be the excuse to push price so strongly up into that level. And many people would be thinking, okay, well, it's going so fast. I got to get out. I got to get out, or I'm just going to buy it right in here because we're going long. It's just an excuse to mitigate and then go short again, potentially. If there's a valid level, if it pushes past that, then this wasn't a valid level to begin with. So even if there wasn't news, right, and price was just trickling and trickling and trickling, if there's no volatility, it would just trickle up to that level and then go, right? Because this was the valid level. And obviously, if you sold it here, you would have made money. But if it you sold it here and it kept going, then this wasn't a valid level to begin with. So you guys are kind of picking up what I'm putting down here. So the news, in all reality, does not matter. It's just an excuse for the big banks to push price in its already intended direction or in the opposite direction to take liquidity, mitigate, or fill imbalance before the right direction can then be commenced. Okay, so having said that, if you still don't believe that, let's first go back to who's moving the market again. It's not us retail traders. It's the big banks, right? So if price is moving so strongly, we would have to be pumping in billions of dollars. Do you have billions of dollars? Absolutely not. Do I have billions of dollars? Absolutely not. Who has billions of dollars? The institutions do. The central banks do. They have the liquidity to do that. They have that amount of money, so they can push price. So why, if the news was just random movements, why would the big banks be pushing price up and down and up and down and just expending so much money? What would be the purpose of this type of movement? There is no purpose. What kind of money are they making? Does anyone just buy or sell something randomly just because? No, there's always a purpose behind every market move. Every market move, 100% of the time. No ifs, ands, buts about it. Not 99.9% of the time, 100% of the time, there is an excuse or a reason why price does what it does. So price, they're not just going to expend billions of dollars just to move price randomly to make you think that news is just a random thing. News is simply just used as that excuse to inject volatility, to hit a specific level, take a specific amount of liquidity, fill an imbalance, or just continue with trend. That's exactly what it is. So what many people will do is this. When news comes out, they will place a buy stop and a sell stop about maybe 10, 15 pips above current price. So because they think that if news goes, let's say it goes short very strongly, they're going to hit their sell stop and then continue and continue and continue and make a lot of money. Well, the banks know this. They know exactly where your stop losses are even beforehand. They know where the liquidity rests. So even if they go and target that liquidity first, great. But let's just say people are doing something like this, they're going to know that. So what they might do, push price up, initiate the buy stops, come right back down, take your stop loss, initiate the sell stops, come back up, take their stop losses, and it's just a whole game of did you get lucky or not, right? And then you lose here, and then you go home crying because you don't know what you're doing. And I'm not trying to sound like a jerk. I'm trying to be honest with you because I know so many people who do this same thing, and it's really ridiculous. Do you not think that they know that? Of course they know what people are doing. They have the order book right in front of them. The algorithms know where the volume is. So why are you continuing to do that? And if you don't do that, then congrats. Pat yourself in the back. You're smart. But I know so many people who do this, and it's ridiculous. Yes, fine. You may get lucky one or two times and it goes in your direction because if there's an order region up here or a mitigation point or an imbalance or whatever, you may have gotten lucky off of a buy stop, but oftentimes it will just chop and chop and chop, and you can't really find a direction. And if you get in, it may come back down. It might scare you because you're trying to buy, then you get out in a loss. Then it may push back up. You try to buy again at premium price, and then it comes back down, scares you, maybe hits your stop, whatever. It's not smart to play that game. So what I say is, I don't care about news. If I know a specific level needs to be mitigated or an imbalance needs to be filled, or I have, valid regions of price, I'm going to hold those regions of price. I don't care what the news does because what the news could do is it could push and have a huge 1 minute candle to the upside, a huge 1 minute candle and close, right? On the hourly, it looks similar to this as well. and you're thinking, oh, there's so much volatility, momentum to the upside, I got to get out of my shorts, or I'm not going to sell it here, I'm just too scared. And then price literally hits that same region and then goes down. And then I get a wick entry because I, can manage my emotions correctly and understand this was a valid level to begin with. But many people don't have that psychology because they get too scared. I was at that one point before. I traded news just like this. I was scared when price was, you know, pushing up very strongly or pushing down. I got nervous. But now I'm not, because I know how the market moves around news events. And if this is the level that's valid, well, that's the level they're going to hit before falling. If it doesn't and it continues and blitzes right through it, then this wasn't a valid level to begin with. And even if there wasn't news and price just continued up and up, just trickling, I would have lost the trade anyways. Right? So now that we know that, now that I've cleared that up, now that you should never make this mistake again, and you should not really see news as a fearful moment. It should just be a regular day or a regular time. It's just an excuse to inject volatility into the market. So if you're already trading or you're looking to trade around a specific level and news comes out, be firm with your analysis. If you believe that that valid level or that level in which you want to be trading is valid, keep it, because if it is valid, it's going to hit that level most likely. Let's say this level is valid right here, right? Let's say this is an area of demand, let's just say, okay? And this is our take profit. If you're thinking, oh, okay, well, price is going like that, then a sharp spike pushes down. If you think this is a valid level, keep it, because most likely what it's going to do is mitigate and go and hit your take profit. Because if that was already going to happen in the first place, because you placed your trade there, you have a reason behind entering at this level. If you have conviction, well, that means in your mind, it probably is a valid level. If it happens to be a valid level, then yes, that's what price is going to do. It is just an excuse to inject volatility very strongly, maybe sweep equal lows, liquidity, come into demand, and then move, right? And then now you're in big profit. Okay, so now let's get into some examples of how we can take advantage of the news. I'm not saying we're going to be trading news, but how we can take advantage of it when it comes around. All right, so I'm going to first start off by going over Euro GBP. We first have to understand market structure, right? Where is our higher time frame objectives? Where is lower time frame liquidity? What could news do before continuing in the overall direction? In this case, we're overall bearish. Lower low, lower high. We actually sold it there a little while ago. It was on the 3-hour buy to sell candle to the exact T, and then we broke structure. Lower low, we're looking for a lower high. So when price during the counter trend up move, higher high, higher low, higher high, higher low, failed to make a higher high, we made a lower low, we pulled back up, retested, pulled back, failed to make a higher high again, and then made the lower low and then broke the counter trend structure to the downside. So now we know we're bearish. So where is our objective to be looking for further continuation short? Because if we're bearish, we need to be looking for pullbacks to short. Well, it's in this most recent level of supply. And we've been talking about this supply for quite some time, those of you who are in VIP or follow our live sessions. So anyways, I'm going to zoom into this region of price here. We can see that we're starting to build liquidity. And having the understanding that on July 21st, if I go back, July 21st of 2022, we have Euro monetary policy statement and ECB press conference, big news event. And we can see how we're already starting to price in that news event. We're trying to get back up into premium price to mitigate. And then here, since we're creating liquidity, sweep the liquidity. Because if we know that we have to mitigate this level, this supply, and then go short overall, we want to start pricing it in. Pricing it in means to essentially be prepared for when the news actually comes out so the banks can make an excuse to move price in the direction. So the banks are already starting to price it in. They're starting to push up, push up, push up, create liquidity, boom, boom, boom. Guess what happens? 8 o'clock in the morning, boom, huge spike to the upside occurs. Everyone's trying to buy because they're buying above resistance, right? The breakout traders, the people who are selling, placing their stops above the high because they're acting as resistance, well, they got stopped out, and now it entices the buyers to come in. But in all reality, It's just an excuse to inject strong volatility into the market to then sweep liquidity and mitigate a level. Actually, it fills imbalance as well. There is an imbalance between this wick and this wick, and we came into that. So this is my example of how it can act as a mitigation. The news was an excuse to push price up, mitigate, and then continue overall and make a lower low. Okay, now I'm going to go into how news events can act as liquidity runs. So this is an example found on AUDNZD. We first have to understand where we're going, okay, and where we were. So first and foremost, I've said this so many times, if those of you who follow me, this level 1.1175 was a higher time frame level. We swept liquidity here. This was also 2018's high, right? If I just zoom into this level, the 2018 high, this is August 13th, 2018, was that high at 1.1175. So if we zoom all the way over to the right, as we were approaching this level, that would be the objective, is to go and look to take that liquidity. So as it took the liquidity, we pushed back to the downside. So now, what is our overall objective? It's either one of two things. Well, it's really just one thing, but one of two things is, since we hit the objective, we're starting to move away from it. If we are to go short because we hit the objective, then we're just going to break structure and go short. But if we are to go long, then we really ought to come back down into our higher time frame level of demand, which is in here. Really right in here, the sell to buy, but if you want to go and zoom in, it's what right in here as well. So either way, when we were trading in here, price had to continue to push short before it could potentially go long. If it went short and broke structure, then great, because we already hit objective, so we could continue to go short. But if it's going to go long, it still had to push down lower. So either way, we're selling off. Okay, so once the news comes out, price was trading right in here at the time. Okay, price was trading in here. We had this sell side liquidity to take. We had this area of demand that we needed to come into at least before potentially buying back up. But we had liquidity here. Trend line touch here, trend line touch here, trend line touch there, and there. If you extend it out, it could be 5 touches, but for the sake of this, 4 touches. So there's a lot of liquidity resting above these highs and this high right in here. So the news acted as an excuse to take the liquidity. And look what happened. We injected volatility at that exact high. I'm going to mark it off. That exact high, we took this high, this high, this high, this high, and this high to draw the trend line, because people were placing stops probably maybe above that high or something. So it uses an excuse, or acts as an excuse, to push price up, to take liquidity, and then move in the overall direction of trend down. We create more liquidity. If there's another news event, something like this could occur. Boom, boom. Maybe something like that. Who knows? Right? But this is another example of how the institutions take news and make it an excuse to inject volatility, to take liquidity, which they were already going to do anyways, even if news didn't come out. Okay? So my next example is to go over an imbalance fill. How do the institutions, take news as an excuse to fill imbalance or make the market efficient? So this happened to be on Swiss franc, Japanese yen, all the way over here. Now, again, we're starting to price in these movements. So at this current time, we're still pushing to the upside, right? We have a level of supply right in here that I've been talking about for quite some time now, around 143 psych level. And we can see, just like the Euro GBP example, we were building liquidity prior to coming into the level. 1 touch, 2 touch, 3 touch, 4, you start to sell off, retail shorts because of the resistance, then pushes right back up, buy to sell, sweeps the liquidity, comes into supply, and then falls. All right, so how does the news act, as an excuse to fill imbalance? Well, we first have to figure out, was this even around a news event in the first place? And this was exactly the same time as the EG one, when we had the buy to sell July 21st at 8 in the morning. You can see this candle was 8 a.m. Eastern Standard Time. That's exactly really when this came out, 8:15, main financing rate monetary policy statement, right? And just because it will affect the euro doesn't mean it can't affect other pairs. News acts as an excuse to take liquidity on all these pairs. I mean, all these currency pairs are manipulated. So we need to be looking across the board, what could be the best potential opportunity for us. And now I'm not saying that you should buy this right in here. Price could have easily died. That's why I'm not saying, I'm not advocating for you to trade news. I'm just making you aware of what could happen. Maybe if you already had a sell position up in here or a sell limit, then that would definitely be valid for you. I don't want you to just place random buys or sells prior to news events coming out. That's just stupid. Look at how this works though. Equal highs were taken, buy to sell. Even if you didn't know this was news, it's a clear sponsor candle, buy to sell, take the liquidity, come up to supply, move away, break the counter trend structure. All we need to do is pull back into that level to mitigate, to then go short, which we actually did right there to the exact T. We caught that entry and then it completely just died. So even if you don't understand news, or maybe you don't understand much of liquidity, you could understand that, we push price up, we push price back down. What time did this occur? Oh, 8 o'clock in the morning, July 21st. Let me go check. Did any news happen around this time? Oh, it did. 8 o'clock in the morning, July 21st. It affected the euro. So the eurozone, Swiss franc is in the eurozone, right? That's London session pairs, GBP, Swiss franc, euro. Okay. So now we push back up, and that's exactly where we mitigate, that exact area. And we can see the imbalance that occurred really between this wick here and this wick here. So I'm just going to drag it over so you can see it. Between that wick, we have buying in here, right? Just within that wick. We have selling in here within that wick, but right in here is just selling. Okay. There's no buying. So that's why we pushed back up to fill that imbalance that the news created. And then we made a move back to the downside. All right. So hopefully that makes sense to you guys. And my second to last, sorry. After we pushed up to mitigate, we created an area of supply. Let's look at the counter trend. High, low, high, low, high, low, high, low, high, low. We fail to make a higher high and then we fall. So this is just the mini trend that's going on here. So once we failed to make this higher high, just in the sequence, right? Just in a sequence, we ended up making that lower low as expected because we already mitigated this level. So now this becomes our supply zone. So when price made that lower low overall and started to pull back, that's exactly where we came back up into. And let's see what happened around this time. You can kind of already tell where I'm going with this just based upon the volatility here, right? But on, what was this? I think it was August 10th. So let's check out August 10th. August 10th was a Wednesday. We had CPI news, 8:30 in the morning, August 10th, core CPI. All right. So right up into here, August 10th, 8 in the morning. That's exactly when it occurred, 8:30, just around that time within that hourly candle. And it had already mitigated the supply. So the only thing for it to do, we already mitigated it. News was just an excuse to propel it in the right direction. And that's my last example, is it acts as a continuation. It just is a continuation in the overall trend. We pull back and we continue. And now we're just kind of chopping around here. But we continue. So we're looking at further shorts, right, for the overall trend. Okay. So it just acts as an excuse. The imbalance was already filled. We already mitigated this supply level. There was nothing to take in terms of liquidity. So everything was good, but just the continuation. So that's what news was for, right? We just had a little bit of a push up and then we just continued with the overall trend. So news is just an excuse to push price in the overall direction, right? Even if there wasn't news, where would I be looking to sell this? Lower low, lower high, lower low? Well, we ran liquidity here. Ran liquidity here with this buy to sell, mitigating that, so we shouldn't come above this level. We made the lower low, so now we want a lower high. This is the most recent supply level that failed to make a higher high after, and we had a massive imbalance that was formed here because just a strong, impulsive move without a retracement, imbalance move, supply. I would have sold it here anyways, but the news just confirmed it and helped me out because it was already meant to go short from here anyways. It just was an excuse to inject that volatility to continue with the trend. All right, so those are my 4 examples. And I hope you've taken a lot of value from this because it's definitely very important to understand. So, guys, if you have any questions whatsoever, please feel free to message me. I'm always available to help you. Hopefully, you guys took some really good value and learned something. This is really the true way of looking at how news events come up and how price moves surrounding these news events. Definitely check out Forex Factory. It's a very good tool in utilizing when news is going to come out, what type of news is it, what time it's going to come out, what day, and what currency pair it could be affecting. So, guys, hopefully you guys learned something. Have a great rest of your day and stay tuned for the next video. Thanks.